All right. So the famous NASDAQ 1 to 25 trade. It looks impressive, but to be honest, it's pretty straightforward. So, like usual, I'll give you my full thought process, I'll give you the explanations, and also the confluences of the trade. So let's start the day where I started. As you guys know, I always wake up around 7, 7:30-ish, and this is where I get on the market. So I think that right now, it's actually earlier now because the time hasn't changed. So I think that that would be the PA I was when I woke up. So remember, I trade mostly every single day. And what's nice about the way I trade is I'm able to go to sleep and have already a pre-established idea of the potential intraday play. Because let me set the record straight. A lot of people, and I think that very, very soon we'll have a little confluence thing, a little sneak peek here. We're going to be adding our confluences um, to be able to list them down because it seems like some members, they start looking at something and then they erase whatever they were looking before and they start oversimplifying the strategy, and this is a mistake. This is why you need to master every single aspect and you eliminate what doesn't work for you. So now it seems like everybody is stuck into the structural expectation, and every time I'm against the structural expectation, it's like if they're pointing fingers at me. I'm like, how come you're trading against the structural expectation, Joe? Blah, blah, blah. Remember, we are a liquidity trader. Our goal is to trade intraday liquidity. The structural expectation, I think I already said that 50,000 times. It's a compass to let us know and give us an idea on how the day will end. So do not start looking at trades purely because of structural expectation. I will ban this from the strategy forever if this is the case. A lot of people need to understand that the pullback and the impulse doesn't translate to taking a trade and trade will explode in the same direction that you bought. When it comes down to structural expectation, it helps also with targets. When you're targeting, you're in a pullback. In example, you're taking shorts. You cannot target the impulse low, and we'll talk about it why this target was here. Now, when it comes, let's focus purely on intraday because it seems like you guys are getting like rusty about the intraday liquidity. But let's talk about it. Where is liquidity? I don't know where my invalidation shield isn't here. It's broken. I'll have to check after. We have a clear sell side liquidity coming out of Asia. We kind of entice sellers, and we have stop losses here. We could maybe say that these are maybe AKA equal highs. I'm done with that, but it's the same thing. Like some people need to get understand that if I identify a breakout here or identify these equal highs, it's the same shit because the stop loss location is at the same place. So don't try to overcomplicate simple things. Speed and momentum pushing lower. Under Asia high low. What do we have on left? Completely nothing, right? Fine. And then price starting pushing with speed and momentum. Is it because we're trading that Asia low inducement? No, because the liquidity is attracted to these stop losses. They want to continue price lower, and this is an evidence that they're taking this liquidity to continue lower. It's just this, right? They drive a little car here. Let's draw a little car. Let's draw, here we go. Here we go. Oh, that's not a Bugatti, right? Okay, that's a, anyways, you get the idea. They drive a car. The gas is now empty. They need to go put some gas, taking the liquidity to continue their route. So whenever, and this is very important, when price start correcting here and takes this, you don't know if there's a reaction until it makes it like a good low, right? The intraday, internal break here. Then you know that this becomes potentially liquidity. When we will make a new low, we will confirm the trade away, and this will become an inducement POI, right? As you can see here, we had a small reaction out of this SMT, like small one. If we go on M1, oops, not 30 seconds, M1, we had a small reaction of the SMT. So we could call this maybe a false reaction, but it's too small. And then went slow, right? And then people see an entry here, but what are we taking from the left here? Nothing. So this will be most likely a pullback, right? It's normal. We don't induce liquidity. We don't trade away from liquidity, okay? Now, price continues its route, making more sell side liquidity here. And we can even say that this cannot be basic. We can say that this is relevant liquidity, and it also took it. So remember when I said inducements can become liquidity in the future. And if you look at this, to be honest, you can even see this like this, right? And this becomes internal, so it's relevant. Oops, sorry. Now we have kind of new breaks here. I'm going to put liquidity here, but just because of this vector candle, but this shit is pretty ugly, okay? Now, again, price goes lower and price is lower. What are we reacting from? Nothing. So when it comes down to intraday liquidity, we have this already taken out, and we have this, but this also is also an inducement POI. right? You get the idea. So what do? We know that maybe you can say that we're reacting from this kind of like zone, and this is considered a false reaction of this decisional play here. But for me, there is liquidity here, and that's pretty irrelevant, to be completely honest, because of this major push here. And of course, when we see this liquidity versus this one, which one is more attracted to? It's this one, right? Because it's more relevant, it made a significant high. And if we go and get this, we are still in the pullback phase and we respect the structural expectation. So these are beautiful evidences to tell us that, listen, this could be a potential interesting low, right? So I'll put an alert here. We're gonna put an alert. Now, price goes into this inducement PY, gives a significant reaction, right? Fine. Will we induce this stop losses? For now, price doesn't give this information. As you can see, we create our first internal break here. Beautiful, right? We go into the decisional POI. Why is this a decisional POI? Because it made a new low, right? This is an internal break of structure, but it's still completely relevant. And we haven't sell from here because this doesn't have enough evidence to take a sell because we have this stop loss. We wait for more price action development, and that's it. So the first target would be here, right? Not because there's liquidity, only because this is the next enticement zone, okay? Why? Because we're building sell side liquidity here. You're blind if you don't see it. So now we made a new low here. Perfect. Stop loss is here. And as you can see, price is now retracing from this point. This indicates for me a beautiful false reaction because this is most likely a trap because it's respecting structural expectation, but also has relevant liquidity. So it's only an intention trap because of the relevant liquidity. And as you can see, price retraces, creates this false reaction, comes back, fills this imbalance perfectly, comes back into the relevant decisional POI. Why is it relevant? Because now it makes a relevant break of structure, right? Because this is the relevant leg, right? If you do this, as you can see, relevant leg, beautiful. And I didn't take this short. Unfortunately, I thought it was kind of a little bit excited for me and no clear refined entry. And for me, it's pretty simple, right? If I see this and I see price coming here, and at the second it's reacting from this POI, I'm already not interested because that's the size of this shit, right? So it's very important. So now, price makes this new low. I close 80% of my position. I'm done. But with the look of the pair, with the characteristic of NASDAQ, usually when it pushes in one direction, most likely it will continue. So I close 80% out of this low where the relevant structural point with relevant liquidity has been identified. If you guys don't mind, I'll remove that stop loss, the SMT here because it's ugly. And then price just dumped. And I took also more partials here. And I had like 5% from here to here. Why was I targeting this? Because it's the impulse low. So I'm actually speculating on the fact that potentially we will take this one and maybe do an FBOSS or continue with the next day. And I'm betting on the fact that we're probably preparing a structural shift. Did we have something on the left to identify this? No. Do we need it? No. Look at the day. Are you blind? Like, look at the day. For me, this was building sell side liquidity. And I was waiting for this to be taken to take buys, maybe. But if I wasn't in the shorts and I would see this reaction to this SMT with speed and momentum and go higher, I would be, no, I'm not taking buys. I'm taking a sell from here. The candles are giving the story and you're just not looking at them. So I received some, I don't want to say the word hate, but I received some messages, pretty weird messages of people saying, yeah, you go against your teaching. No. Just because I have an optimistic partial at the TP, then it means we go against. No, the trade play was to go here. That's a 1 to 11, right? For me, it's more than enough. I just let the rest run until here. Why not? It's free fucking money. Understand that when I place a position, it's usually the most optimistic TP and not the most realistic one because as you guys know, 80 to 85% of my trades do not close at full volume. They're partialed and break even. And I don't care because at the end of the day, the goal is to be in blue. And remember, my partials are bigger than some of you guys. So it's normal that if you're trading a $100 account, taking a partial will be like, fuck it, right? But for me, if I take 80% at a 1 to 11, that's like a 1 to 8, 1 to 9 trade. Like, that's a lot of moolah for me. Like, I'm good. That's 0.9%. And it completes almost 2 days and a half of trading. Very important to, when you're looking at structural expectation, that it cannot define your whole day. Because see, this as an expectation was this to make this high and this to make this high like this. It broke below. So the first idea is that this becomes a potential FBOSS, right? This is the first idea. Why? Because we have been building this upwards trend. Is this a net boss? We do not know. And look what happened after. The price continued. So maybe we are now engineering and preparing a new structural shift. Some of you guys need to be able to let yourself submerge with what the PA gives you and not go into that whole predicting mentality. You're gonna drive yourself get sick of doing this. Being a trader is being able to navigate the chart and updating with the new evidence that is prepared, that is being done. So let's erase everything and let's go back into creating another scenario. Imagine this was an FBOSS, right? FBOSS here. We have our S&P, and this is an inducement POI. But imagine price decided to react to this decisional zone, right? That has, yes, relevant liquidity. But imagine it would have made a new high and then continued and then dumped. And it would have taken, like, let's say, this Asia high that could be potentially like, there's kind of liquidity above this high since it's the daily high. And this is the same PA, but the reaction to this point is different. Are you guys understanding what I'm trying to say? When price reacts to this decisional zone, we do not know the outcome. Every single thing that happens in the market, you need to update your thought process. So you think that here on the PA here, we're here, right? At this point, the candles are playing. You don't know. I don't know. I don't care. And I don't really care if price makes a new high or react. I'm going to be ready for both scenarios, right? So this is different. If you decide to take a short directly from this is risky. It doesn't mean it's not confirmed or it's not a good trade. It's just riskier. And these kinds of trades, I take them when I'm in profits. There's an inducement POI. It's an FBOSS. There's an imbalance. Like, listen, it's okay. And then if price does this and continues, you just take a stop loss. Like, it seems like stop losses are the end of the world. Listen, if you want to be a trader, stop losses will be part of your journey. I take multiple stop losses per week. It's just that my trades are so big that it catches my stop losses. And when I take a stop loss, I don't immediately re-enter emotionally. You do not know the outcome of what price will do. You need to adapt. And this is why if you think that this is too risky, fine. You do like I do when I'm not up for the day. We wait for more price action development. So you put an alert here. You put an alert here. If this price does an alert and goes back to the POI, fine. If it does an alert and just continues like this, you miss the damn trade. Are you understanding where I'm heading? Is too many people are not in self-control of their emotions. Most of you guys are adults. You need to start controlling yourself and how you react. We are traders. We are not like mastermind magicians that are able to predict the future. Even the best traders in the world, when they buy stocks, it goes in drawdown. It's impossible. Like, and maybe I've created a false reality. Is you guys see that I take precision trades, and this is based on practice. But I have maybe taken 2 stop losses before this, right? Maybe I should start a stop loss channel so people could stop putting myself on a pedestal because they think I never take stop losses. It's part of the game. And example, this, I was up for today. I would have taken, let's say this, and then price would have induced me and do this. I would have re-entered here because it's still valid. But this is a stop loss. Is it valid? It's not really that it's valid. It's the idea I had for this trade was valid. The evidence that I have pre-established for the trade were valid, were confirmed. My confluences lists were good. My emotional state was good. I took the risk. Every single trade that you take, it's a risk. You are speculating the market. You're not predicting. So we really need to work on that for some members and really try to grow into becoming more of a trader and not like a guy that tries to predict and time the market. It doesn't work that way. It doesn't. And if price you enter and it breaks even and leaves, it leaves. It's part of the game. Be proud that you were on the good side of the market. That's what most people struggle. So here, targeting this made total sense. Look at all the liquidity price has built to the sell side to induce sellers, and at the same time take this look. It made total sense if you look at purely intraday. But some people now are stuck into that higher time frame structural expectation bubble, and they forget the core concept of the strategy. Where is the liquidity? It has been built. Fine. Where are we taking it? And it doesn't mean because you take liquidity that you reverse. And we'll talk about that in tomorrow's call, because I'm seeing some things that needs to be corrected. So every single trade I take a risk. Is this risk calculated? Yes or no? Is it a risk based on my emotion? Am I in a gambling state? Most likely no. So what do you do in that case? You just actually take a risk, calculated risk, you accept that risk, and that's it. we need to start really switching our mindset around and stop being so emotional about taking stop losses on $100 account. And people will say, yeah, but it's not the money. It's because I want to make it. Yeah, it doesn't make any sense. You want to make it, but you're acting based on emotions. Doesn't make any sense. We lock in, we focus, and we build our case purely based on structural and liquidity evidences. So if we continue to the same idea, look at it today. Building this structural expectation bullish, right? Bearish. Price goes low, it reacts to nothing. So what's your excuse to go high? There is no excuse, and people don't know the difference. This is not a trade away, right? This is just the enticement low, then induced to get this liquidity to then trade away. You need to remember the liquidity attraction and the trade aways are two different things. The liquidity attraction is on the way to the inducement, and the trade away is here. And as you can see, structural expectation in this current day, it worked well. The expectation since this low was to make a new low, and it has worked. See, it has made a new low. But look at the direction, right? I took a short here, and I took a break even. Boom, boom, break even. That's it. It's part of the game. What can you do? Listen, I'm not gonna die, right? Did I re-enter buys? I missed them. Did I enter short? I wasn't in the computer anymore. It's part of the game. So let's become traders, not predictors, or a little magician trying to do our little prediction, market prediction. That's for gurus, that's for bullshit. If you want to trade and be a real trader and have an edge, not knowing what happens, having an edge, a proven edge, then continue doing what we're doing and working on your case studies, your daily markups, and identification of evidences to prepare the field to trade. Pulling the trigger is just the last piece of the puzzle. If your puzzle is all messed up, you're never going to be able to build a case. So I hope you guys enjoyed this video. That was NASDAQ on March 26th, 2025. And I catch you guys all in Discord. Peace.